you guys sent in Micron Technology's financials. And wow, did you guys give us a lot to dig into? We've got balance sheets, cash flow statements, income statements. It's like you want us to really get under the hood and figure out what's going on with Micron financially.
Absolutely. And you know what? It's a fascinating company to take a look at because there's a lot going on.
Yeah. So to help us kind of break it all down and make sense of these numbers, we've got an expert with us. So welcome.
Hi, thanks for having me.
So think of this as we're giving Micron a financial health checkup,
Yeah.
right? We're
Yeah.
looking for those vital signs to see if they're thriving or if they're maybe just barely hanging on.
Right. And sometimes numbers tell a very interesting story. Well,
They always
doing
do.
All right, well, let's jump right in. Okay, first up, we got to talk about Micron's revenue. And, most companies, you see some ups and downs with their revenue, right? But Micron is something else. I mean, their revenue's all over the place. It's wild. We're talking massive growth in fiscal year 21, then bam, a steep drop in 22, followed by a rebound in 23. It's like riding a financial roller coaster blindfolded.
And you know what's so interesting about that is you can actually tell a lot about what's happening in the broader market just by looking at Micron's financials, because what we see happening there with their revenue is really a reflection of the cyclical nature of the memory chip market.
So it's not just Micron doing their own thing. Their performance is directly tied to these big market forces at play.
Yeah. But here's where it gets kind of interesting for me, at least. So despite this wild ride that is their revenue, they've got a ton of cash. They're sitting on a pretty hefty pile of cash and short-term investments, especially in their latest report from May 30, 2024. Now, to me, that sounds like a good problem to have, right? Cash is king, right?
You would think so, right? Cash is very important, especially in a volatile industry like the memory chip industry, because it does give you that cushion right when things are down. However, and this is a big however, however, if you look at that same period and you look at their free cash flow, it's negative.
Oh, so it's not just about how much cash they have, it's also about how they're spending it, right?
Exactly.
Because you can have a ton of cash, but if you're spending even more than you're bringing in, well, that's not really sustainable long term, is it?
Exactly. And I think that's one of the biggest things to understand about Micron is you have to understand where their cash is going.
Which brings us to the next thing I wanted to ask you about, which is their capital expenditures. And man, are they spending some money. We're talking billions of dollars year after year on capital expenditures. So clearly they're not afraid to spend money. Is this the cost of doing business in the memory chip market? If you want to play with the big dogs, you got to spend big.
You hit the nail on the head. It's a very capital-intensive business. So building those fabrication plants, buying the equipment it takes to actually make those chips, it's expensive. So when you compare that to a software company that primarily just deals with ones and zeros, it's just a completely different ballgame.
So they're basically making these huge bets year after year, investing tons of money in hopes that it's going to pay off down the line. It's a risky business.
Absolutely, and it is a balancing act.
And speaking of a balancing act, let's talk about their net income because, surprise, surprise, it's another roller coaster ride.
Right.
Up in 21, down in 22, back up in 23. But even in those good years, their profit margins aren't anything to write home about. So what's the deal with that? Why isn't there more profit?
Well, a key thing to remember about the memory chip market is it is essentially a commodity.
A commodity market. You mean coffee beans or crude oil where the price is kind of all over the place based on how much is out there and how many people want it and everybody's kind of selling the same basic thing?
Exactly. Yeah, it's not a perfect analogy, but you get the idea.
Right.
If there's a huge harvest of coffee beans, all of a sudden the price is going to drop right because there's just too much supply and not enough demand. And it's the same kind of thing with memory chips. If there's a sudden glut of memory chips available, the prices are going to plummet. And that makes it really hard for companies like Micron to charge a premium price.
Yeah.
Even if they have the best, most technologically advanced memory chips out there.
So even if Micron's engineers are wizards and they come up with these incredible cutting-edge memory chips, if everyone and their grandmother has enough storage space already, then Micron could still end up struggling.
Exactly. That's the thing about commodities. You're at the mercy of these market forces to a large extent.
So it's not just about being innovative, it's about timing too.
Exactly.
Wow, so they're really playing a high-stakes game here.
They are.
They have to invest all this money to stay ahead of the curve. And on top of that, they're dealing with this market where the prices can swing wildly.
Yeah, that's a really good way to put it. It's they're trying to predict the future and make these huge bets based on those predictions.
And how exactly are they financing all of this? Because we talked about those capital expenditures, right? They're spending billions of dollars a year. Are they just printing money over at Micron headquarters? What's the deal?
I wish it were that easy. No, they're doing what a lot of companies in their position do, which is they're using debt to finance some of this growth.
Debt. Okay, so now we're adding debt to the equation. So they've got a good amount of cash on hand, we know that, but they're also spending a ton of money, and their profits can be a little unpredictable, shall we say. And now we're throwing debt into the mix. Should we be concerned? Is this like a red flag we need to be paying attention to?
Well, debt in and of itself isn't necessarily a bad thing. It's more like a tool. And like any tool, it can be used effectively or it can be misused. So in Micron's case, it's allowed them to make these big investments and grow their business. But it does add this whole other layer of complexity to their financial picture, right?
Hmm.
Especially when you consider how unpredictable the memory chip market can be.
Right, because it's like taking out a loan to buy a house, right?
Right.
If you're confident that you're going to have a steady income and you can make those payments, then it's probably fine. But if your job security is a little shaky or, your income fluctuates a lot, then that debt can start to feel a little riskier.
Exactly. And that's where those financial ratios you sent over come in handy.
Okay, so how do we figure out if Micron is using debt responsibly? What should we be looking at?
So one of the most important ratios to look at when you're trying to understand a company's debt is the debt to equity ratio.
Debt to equity ratio, okay.
And basically what this ratio tells you is how much debt a company is using to finance its assets relative to the amount of equity it has.
Okay, so a high debt to equity ratio would mean that the company is using a lot of borrowed money to run its business, which could be riskier if that business doesn't make enough profit to cover those debt payments, right?
Exactly. The higher the debt to equity ratio, the more leveraged the company is, and that can be
Yes.
riskier, especially in a cyclical market like we've been talking about. And there's no magic number for the debt to equity ratio that tells you whether a company is in trouble. It really depends on the industry.
So for Micron, a company that's in this like super competitive market, how does their debt to equity ratio actually look? Like, are they swimming in debt or are they okay?
Well, as of May 30, 2024, their debt to equity ratio is about zero point 0.5.
Point 0.5. So is that good or bad?
Well, it means that for every dollar of equity, they've got about 50 cents of debt.
Okay, and what does that tell us? Like, is that normal for a company like Micron?
It suggests that they do use a fair bit of debt,
Yeah.
but it doesn't necessarily mean that they're like on the verge of collapse or anything like that. It's not like they're drowning in debt. But it is something to keep an eye on because like we were talking about earlier, they are operating in a very cyclical market.
Right. So it's not just about the debt in isolation. It's about the debt in the context of everything else that's going on, right?
Right.
Like their negative free cash flow and all of the investments that they're making.
Exactly. It's all connected.
And
And the real question is, can they keep up with those debt payments even when the market takes a downturn?
Yeah, because it's kind of a balancing act, isn't it? They've got to spend money to stay competitive, but all that spending can make their cash flow situation a little precarious. And then if they take on too much debt to finance that spending, well, that can make them really vulnerable. So for our listener out there who's maybe thinking about investing in Micron, what would you say is like the key takeaway here?
I'd say Micron's a really interesting company.
Yeah.
Because on the one hand, they're in a really exciting industry, right? Like everybody wants memory chips these days, but it's also a very challenging industry to be in.
For sure.
They've got to spend a lot of money to stay ahead of the curve, and there's no guarantee that those investments are going to pay off. And like we've been talking about, their debt levels are something to watch closely.
So you wouldn't necessarily say that Micron is like a set it and forget it kind of investment then?
Probably not, no. But here's something else to think about, and this is something that could really shake things up in the memory chip market, and that's AI. Because as you know, AI requires a ton of memory,
Oh, yeah, for sure.
and the demand for AI is just exploding right now. So the big question is, what's that going to do to the memory chip market? Is it going to
Yeah.
lead to like this huge surge in demand that's going to benefit companies like Micron? Or is it just going to make this already volatile market even more volatile?
That's a really good question. And unfortunately, we don't have a crystal ball, so we can't tell you for sure. But hopefully, this deep dive has given you some things to think about. We've talked about Micron's revenue, their investments, their cash flow, their debt, and of course, the exciting and potentially terrifying world of AI. So do your own research, pay attention to what's happening in the market, and remember that investing always involves risk. And on that note, that's a wrap on our deep dive into Micron technology. Thanks for listening.